Hi everyone, I am Emmy Torres and I am the leader of this group. My topic is all about accounting elements. But before we will discuss that topic, let's first discuss some important factors. So, considering the fact that the owners of the management and the investors are primarily concerned in the success of the business in terms of its operating performance and financial conditions. All the informations that you want to know are shown in the financial statement. Again, all the informations that you want to know are shown in the financial statement. Financial statements explains the different items, the valuation or measurement procedures, and other important details. Financial statement is a structured report. Thus, it follows a certain format. Financial statements are composed of the different accounting elements. So these are the assets, the liabilities, capital or equity, revenue, and last one is expenses. So let's discuss that one by one. So, accounting elements are the broad classifications of accounting values in which similar business transactions and events are grouped. So, let's first discuss the first accounting element. So, that is the asset. So, assets are the resources owned or controlled by the enterprise or by the business. So, assets, those are the properties or rights owned by the business as a result of past transactions. So past meaning it already happened and it already happened. Then it is owned by the business with future economic benefits. Okay, so there are four requisites that for an item to be classified as an asset. So the first one is resources of the business. Number 2, controlled by the enterprise. Number 3, result of past transactions or events. Number 4, expected future benefits that may derive. So those are the requisites of the asset. So let's proceed. For an item to be called as an asset, it must be satisfy the mentioned requisite. So let's discuss first the first requisite, which is the resources of the business. So the item must be the property of or owned by the business, or the business must have the legal right to the property. For example, the merchandise or goods ordered from various suppliers, and it cannot be called as an asset unless the goods are received by the business or the title has been transferred to the business. So that's it. So let's move forward to the second requisite. So the second is controlled by the enterprise. So the disposition and the use of the property belongs to the business. In other words, the business can do what it wants legally to the property. So from the word controlled by the enterprise, so the enterprise have the right to control or manage the asset. So that's it. So for example, the building owned by the business can be used for administrative office or be rented for additional income. So thus the building was controlled by the enterprise. Therefore, it is considered as an asset. So that's it. So let's move to the third requisite. So the third one is result of past transactions or events. So as what I have said while ago, that the asset are the resources which is owned or owned by the business as a result of past transactions. So for example of this is the amounts collectible from various customers are results of sale transaction that happened in the past. So from the example, it already happened in the past, so it is the result of past transaction. So therefore it can be considered as an asset. So the last requisite is expected to give future benefits. So it means that an item should provide additional economic benefits to the business in order to be classified as an asset. The benefits that an item can provide is that example of that is it can increase in the wealth of the owners, and it can improve in the production capacity, and also it can increase in the operating performance or may provide additional cash flow in the future. So that's the four requisites that an item must satisfy in order to be called or considered as an asset. So now let's discuss classification of assets. So according to SEC or the Security and Exchange Commission or the Bangko Sentral ng Pilipinas or BSP, the assets in the financial statements are arranged and classified based on the prescribed rules and procedures. So there are two classification of an asset. So the first one is current asset and the second one is non-current asset. So let's first talk about the first classification of an asset, which is the current asset. So an asset can be classified as current when it satisfies of the following criteria. So there are four criteria that an asset must satisfy in order to be called as the current asset. So the first one is it is expected to be realized in or is intended for sale or consumption in the entity's normal operating cycle. Second is it is held primarily for the purpose of being traded. Third is it is expected to be realized within 12 months after balance sheet date. And the last one is it is cash or cash equivalent unless it is restricted from being exchanged or used to settle liability for at least 12 months after balance sheet date. Take note, all other assets that does not meet the criteria of the current asset, so it is automatically classified as non-current asset. So let's first discuss the number one criteria, which is it must be realizable or consumable within the normal operating cycle. So in order for an asset to be classified as a current asset, it should be realizable or consumable within the normal operating cycle of the business or enterprise. So the term realizable there, it means that the asset can be converted into cash or cash equivalents or credit. So it implies that there is the element of exchange of values that takes place in the process of realization. So the term operating cycle refers to the span of time from the point of acquisition of goods or materials. So the way that they acquire goods or items or materials for processing up to the realization in cash or cash equivalents. So let's move forward to the second criteria. So the second criteria is it is held primarily for the purpose of being traded. So it means that an item or an asset can be classified as a current asset when it is held primarily for the purpose of selling it when the need arises. So when there is an immediate need, then the asset can be you're able to sell the asset or the item. So therefore it can be considered as a current asset. So the third criteria for an asset to be classified as a current asset, so is expected to be realized within 12 months. So that means that it is expected that the items is realizable. Realizable means it can be convertible into cash or cash equivalent. So within 12 months, or that is equivalent to 1 year from the date of the financial statement. So from the date of the financial statement, if it reaches to 12 months, within 12 months or 1 year, so it is already expected that the items can already be converted into cash or cash equivalent. So let's discuss the last criteria. So cash or cash equivalent without restrictions. So current assets also include cash and cash equivalents, which are not restricted in the operation of the business. So the cash of the business intended to pay the suppliers and for payment of salaries and other expenses. So if the cash is restricted in the business operations, therefore if it is restricted because of specific purpose, therefore the item cannot be considered as a current asset if there is restriction in the operation of the business. So in order for it to be considered as a current asset, so it must be without restriction. The cash should be not restricted in the operation of the business. So that's it. We already discussed the criteria for the item to be classified as a current asset. So now let's talk about current assets accounts. So the term account there, meaning it is a device that summarizes business transactions and events. So it is labeled or identified by a specific name in order to identify from one another. So for example, I have my account, so it is labeled by my name. So and you have your account for a business event or other transactions, so it is also labeled with your name. It must be labeled with your name in order for identification from another account. So the name designated to the account which describes its nature is called the account title. So the account titles of typical current assets will include the following. So there are 8. So number 1 is cash. Number 2 is petty cash fund. Number 3, notes receivable. Number 4, accounts receivable. Number 5, allowance for doubtful accounts. 6, interest receivable. Number 7, supplies. Number 8, prepaid expenses. So let's first discuss the cash. So cash is the account title that describes money either in paper or coins. So we already know about cash. So when we say cash, it refers to money, funds, whether it is in paper or coins, as long as it talks about money. So the term cash will also include money substitutes. So examples of money substitutes are checks, postal money orders, bank drafts, and treasury warrants. So the company maintains 2 types of cash. So one type is it is kept in the safe vault of the company, or it bears the account title, which is cash on hand. And the other one is deposited in the bank as current account, or it bears the account title as cash in bank rather. So those are the 2 types of cash maintained by a company. So that covers all my topic, and the other account titles, the following account titles will be discussed by my members. So that's it.
Hi everyone, I'm Gwendolyn Sitalabing and I'll be your next reporter. So tackle about cash equivalents. Cash equivalents is a short-term investment where it is readily converted into cash when the need arises. So for example, time deposit with maturity period of 5 months or a BSP treasury bill with maturity period of 4 months are not included in the classification cash and cash equivalents. Why? Because it is emphasized that cash equivalents is not account title. So cash equivalents is a line item in the balance sheet, and it is classified as a non-current asset. So I will proceed to the account title. The following are the account title. First is the petty cash fund. Second is notes receivable. Third is account receivable. Next is the allowance for bad debts. Next is interest receivable, followed by advances to officers and employees, and supplies or supplies on hand, and lastly is the prepaid expenses. So what is petty cash fund? Petty cash fund represent a money placed and set aside for petty. Petty, in other words, are small expenses. Like for example, a small payments, a small payments like the fare of errand boy amounting by 20 pesos. It is an example of petty cash fund because it has only a small expenses, and you cannot issue it on the check because it is only a small expenses. So next account title is note receivable. So note receivable represents collectibles from customers or clients arising from sale of goods or services which are supported by promissory notes executed by the customers. So basically, if the note receivable account arises because business entities extend to the credit to the customer, and it is classified as a current asset because it is collectible with 1 year, notwithstanding the normal operating cycle. So next to note receivable is the account receivable. This account title represents collectibles from customers arising from credit sale of goods or services and not supported by promissory notes. So this account title rather is similar to note receivable since it is represent collectible amounts, and the difference between the two is you can support in the notes receivable, you can support by promissory notes, while in the account receivable it cannot be supported with promissory notes. So next of accounts receivable is the allowance for bad debts. So this account title is an asset offset. Offset meaning the decrease of the total, or contra asset meaning is the negative asset, which provides for possible losses from uncollected accounts receivable. So allowance for bad debts is also called allowance for doubtful accounts. Bad debts meaning a debt that cannot be recorded. Why is it called allowance for doubtful accounts? Because, like for example, the account is only an estimate. So if the business is definitely sure that receivable can no longer be collected, then the receivable should be closed, or technical terms be written off. It will be no longer collected because the allowance for doubtful account is used to end of the accounting period to record for adjustment of the realizable value of receivable. So next is the interest receivable. Interest receivable represents the amount of interest earned on note receivable. So it is pretty sure that interest receivable is understandable of you. So I'll be giving you as an example. Like for example, the amount of interest is computed by multiplying the principal amount borrowed, the time period of the debt or financial obligation, and the interest rate. So, like for example, I'll be the one who will let you borrow the money, and if you cannot pay at the maturity date or what's the due date of the payment, the interest rate will be increased. So next of the interest receivable is advance to officers and employees, and it's very understandable for you guys to understand what is advances to officers and employees. So this account title represents amounts collectible from officers or employees within arising from cash advance. Cash advance meaning it is the most instances are deductible against the salary of the employees. So, for example, I am the officer and you'll be the employee. You will having an cash advance to me, then that money to get from me, it will be deduct deduct to your salary. That's it, or what we call advances to officers and employees. Next of that is supplies or supplies on hand. So it represents the cost of stationery, paper, pencil, ink, and other related supplies purchased and used but still on hand at the end of the accounting. So, like for example, store supplies, office supplies, shop supplies, manufacturing supplies. This is an example for supplies or supplies on hand. Let's proceed to prepaid expenses. Prepaid expenses represent expenses that are paid in advance but not yet incurred when remain rather unexpired at the end of the period. In other words, the business has paid the expense in advance but was not able to utilize it at the end of the period. Like for examples, prepaid rent. So you will be renting a house, then you will having an advanced expenses to that rent. That's what we called it prepayment. Prepayment because the contract requires a payment in advance so that you can rent on that certain thing. So that's the end of account title. Then next is the non-current assets. These are properties or resources controlled by the business not classified as current asset as a result of past events and from which future economics benefits are expected to flow of the entity. So the following line items are normally made: property, plant, and equipment. And it is called long-term investment, intangible assets, other non-current assets. So a long-term investment is more than 1 year, like land, building, machinery, and equipment. So enough. So much for non-current asset. We'll proceed to the accumulated depreciation. So accumulated depreciation is an asset offset. As I mentioned a while ago, asset offset is a decreasing and contra asset is a negative asset account. So will be deducted from related property and equipment except lands. So it simply refers to the sum of depreciation for several years rather. I'm sorry for the. So next is the long-term investments. Long-term investments are investments that held by business entity for the purpose of accumulating wealth through capital distribution such as interest, royalties, dividends, or rentals. Investments are also held by the business entity for capital appreciation or other benefits earned from trading activities. So these are the examples of long-term investments. Investment in stocks, investment in bonds, investment in subsidiaries, investment in associated using equity method. There are many examples of long-term investment, but long-term investment accounts are not usually used. So we'll proceed to the next, intangible assets. Intangible meaning you cannot see or you cannot touch it. So without physical substance that are controlled by the entity. Like for example, copyright, franchise, computer software. Next of that is other. We have a while ago we have non-current assets. So there's other non-current assets that could be properly classified the above classification: property, plant, and equipment. That is other non-current assets, and it is a long-term advances to officers and employees. It is a very long-term refundable deposits. The other non-current assets. So in this introductory accounting course for sole proprietorship, the most commonly used account titles in the recording process and financial statement preparation are those classified under the current assets and property, plant, and equipment. So next is the liabilities. Liabilities are present obligations of the enterprise arising from past transactions or events, the settlement of which is expected to result in an outflow from the enterprise of resources embedding economic benefits.
So as of now, we will going to continue our discussions. An item is considered a liability if the following requirements are met. So, first is present obligation. Liabilities are financial obligations that exist the date of the financial statements. The business has the obligation to pay creditors as a balance sheet date and does not include the liabilities that are expected to be incurred. So it means that the payments or the debts of the business should be in a specific time or in a due date. So second one arises from the past transaction. Liabilities existed because of the transactions entered or carried by the enterprise in the past. In other words, there can be no liability or unexpected transactions or transactions happen in the future. It means that the payments or the salaries of the employers will be unheld or unpaid because of the transactions like goods and services. Example of that is the liability of the business to pay the salaries of the employees or workers is due to the services rendered by the employees in the past days. Likewise, the liability of the business to pay its suppliers is due to goods or services delivered by the suppliers in the past. So the third one, settlement result to outflow of resources. A liability is a financial obligation that has to be paid in a form of cash or other resources. In other words, there will be reduction in the resources of the business once liability is settled. So, na siya reduction if ang business na siya unpaid or undebt nga salaries sa mga workers or sa mga employees. Example of that is there was employers or workers has not yet been unpaid and the amount salaries was not yet unpaid was 50,000 pesos and the amount cash of the business is only 80,000 pesos. If the business will going to pay the employees or workers of the total cash of 50,000 pesos, then the only total cash of the business will 30,000 pesos. That's the means of settlement. The settlements result to outflow of resources or the decrease of resources. So, na siya decreases because of ang ilahang unpaid or undebt nga salaries. Then the fourth one is transaction provide economic benefit. Generally, the business incurs financial obligations. It enters into a particular transactions. The business transactions, however, is assumed to provide additional economic benefits to the enterprise. So, example of this, that the business will incur financial obligation once it will buy goods on credits. Kira?
May lecture dito, Sam? Wala na may lecture dito.
There are the following account incurrent liabilities accounts. First one is account payable open.
Lista na na inyong ngalan.
First one is account payable. It also called as open account. It denotes obligations or debts of the businesses arising from the services received, merchandise, supplies, or property, plants, and equipment acquired on account. It means that it means that account payable or an open account doesn't require an promissory notes. Promissory notes means dili siya wala siya gawan o dili payable. Similar to account payable, the former account is supported by a promissory note executed by the business in favor of creditor or supplies goods and services. So, ang notes and notes payable is same siya sa accounts payable, but it requires a promissory notes. Then, the third one is bank payable and loan payable. This account title represents the financial obligations to bank and other financial institutions.
Go.
When the bank borrows monies for additional working capital or for capital expenditures, the business incurs a liability that must be settled in the future. So, example, ang mga loans, ang para sa mga lendings, mga loans, na siya mga interest or na siya due time na kailangan mo siyang ma-pay. Then, the fourth one is utilities payable. Denotes obligation to utility company for the use of utilities in the business operation. It means that we know the utilities is the kanang butang or things na gigamit sa business. Example of that is the electricity, gas, and waters. Mao na siya utilities payable or gibayran nato sa usa ka company. Then, salaries payable. This account title represents unpaid salaries of employee and workers for the services rendered as of date of financial statement. It means that from the word salaries or ang balayan or ang payments sa employees or workers na wala siya na kuan sa due date because of the transactions or deliveries of the goods and services. Then, interest payable, unpaid interest to the bank or other financing institution because of amounts borrowed. Example of that is mga lendings, di ba? Gakuan sila mga interest if nga mo borrow kanilag money. Then, na po siya specific date or months nga kailangan mo siyang ma-pay. Then, SSS premium payable. And the amount withheld from the salaries of employees and the employers unlimited share contribution of the Social Security System. We all know nga familiar na to ang SSS premium payable. Kay gigamit na po na siya sa in case of emergencies para sa mga hospitals, makover ang imong mga balayan
Insurance expense. It
sa
also set the
hospitals.
expired portion of premiums paid on
PhilHealth-
insurance coverage.
PhilHealth
So
premium.
business enterprise
Similar
usually
na po na siya sa
property,
SSS,
plants, and
but
equipment against fire or other
ang
form of
PhilHealth
calamities.
is
The basic concept of insurance
focus
is to
na siya
recover
sa
some amounts
mga
from
health sa
insurance
usa ka
companies
tao or
if
sa mga
some
em-
unfavorable events
sa-
happen. Interest
It covers some
represents the amount of
hospitalization
interest
expenses
paid
of
or
the
incurred
employees
during the
with the latter
accounting
account
period.
is
So
intended
interest
to
expense
cover
usually
the
arises because of
retirement
borrowing.
benefits of the
It also
employees.
in non-operating
It means
expense
that
shown in the income
focuses on the
statement that
health
represent
of the
interest payable in
employees
any
or
borrowings,
workers
bonds,
nga
loans,
gahok
convertible
nga
debts, or lines of
tingkuan
credit.
ang PhilHealth.
The next one is
Example of that
taxes and
is
licenses.
if
Represent
napay
payment
emergencies nga
for or
wala kayong
incurrence of taxes,
something
licenses, government fees, and other similar fees. A business
PhilHealth
entity
is
before
very
it can
helpful
operate or before
in
it's given a
terms
permit
of
to operate legally it has to pay several
emergencies
types
nga
of
press
taxes
anang
and
nasa
fees.
hospital ta
Yearly,
wala
this
tay
type
money.
of expense will
Kung
start
natay
to
PhilHealth,
accrue when the business
ang mga
continues to
expenses
operate.
sa mga
So when we
bayanan
say
sa
accrue,
hospital,
it is
makover ra through
it is
PhilHealth
given to
payable,
someone or to come
premium
to. The
payable.
next one is the utilities expense. Represent the amount incurred or paid for the use of lights, water, gas for the business. So the appropriate accounting title for expenses on the telephone and other forms of communication, including postage stamps, is the communication expenses. Bad debts expense or doubtful accounts expense represents the amount of receivable estimated to be doubtful of collection. This account title is used at the end of the accounting period to record the estimated uncollectible portion of receivable. The next one is the depreciation expense. Represent the expired portion of the cost building, machinery, equipment, store equipment, and other types of property, plant, and equipment except land. So this account title is usually used in the recording process at the end of the accounting period when all the accounts are adjusted in order to present fair financial statement. SSS contribution represent the share of the employer in SSS contribution for the welfare of the employees as required by special law. So under special law, employers are required to contribute specific amount as counterpart of the retirement benefits of the employees under Social Security System or the SSS. The contributed amount will accrue for the benefits of the employees. PhilHealth contribution represent the employer's share in Medicare contribution of the employer. So the employees usually contributed certain sum money for health coverage to Philippine Health Insurance Corporation or the PHIC. The amount is usually deducted from their salaries. So the employers, on the other hand, are mandated to contribute some amounts for health coverage of their employees. The amount contributed is additional operating cost on the part of the employer since it will be employees who are benefited of the system. So, pag-ibig contribution represents the contribution of the employer to pag-ibig for the benefits of the employees as mandated by law. So the accounting attributes of this account title is similar to PhilHealth contribution. Once the employee contributes and become a member of Pag-ibig, the employer is forced to make similar contribution, though the one benefited by employer's contribution is the employee. Miscellaneous expense is used for the amount paid or incurred where separate account is not necessary because the expenses are immaterial and common and infrequent. So expenses that occur regularly should not be recorded and presented under the amount title of miscellaneous expense. Even the event does not regularly occur, but the amount is considered material, it should not be classified as miscellaneous expense. Sales is used when products are sold to customers. So the sales transaction can either be on cash basis or on credit. When using the account title, sales business does not take any distinction as to the type of product sold. So for example, a business engaged in the buy and sell of shoes will use the account title sales. Every time there is sales transaction, it does not consider the size of the shoes, its color, brand, and any distinguishing feature in using the account title. All types of shoes that will be sold will use one account title only for the sale, and that is sales. Sales return and allowances represent the amount of goods or merchandise returned by customer. So customers return the products because of wrong specification of the product or it's defective. So account is deducted from sales in financial statement presentation. The next one is sale discount. Represent the amounts granted as discount to the customer. So usually, customers are granted discount because they paid promptly their accounts. That is, they paid their accounts within the discount period. Purchases represent the amount of goods or merchandise bought from supplier. So, the account title covers all types of product bought from supplier. In other words, the business does not maintain several purchases accounts because it bought several products. For example, a business enterprise engaged in the buy and sell of school supplies will use only the account title purchase every time purchases are made regardless there are 50 kinds of school supplies bought. Freight in represents the amount paid for the fare of the merchandise bought by the business from various suppliers. So freight in, basically referring to the fare of the product from the supplier to the business premise, is added to the account titled purchases. So freight in is an incidental cost in the acquisition of merchandise, hence it added as part of the cost of the product purchase. Purchase, return, and allowances represent the amount of merchandise returned by the business to supplier. So sometimes suppliers accidentally ship wrongly specified products to their customers, or the goods received by business entities are defected. Usually the recipient returns the goods to the supplier. The use of the account title purchase, returns, and allowance to describe the goods returned. Purchase discount represent the discount granted by the supplier because of the prompt payment on credit purchases. So when the business enterprise pays its credit purchases within the discount period, the supplier usually grants discounts. So the amount of discount granted is recorded by the buyers of goods through the account titled purchase discount. Merchandise inventory represents the amount of goods still and sold at the end of the accounting period. So business entities engage in the buy and sell their inter product at the end of the year. There are two types of merchandise inventory recorded during the year: the merchandise inventory beginning and the merchandise inventory ending. When we say merchandise inventory beginning, those are unsold goods at the beginning of the year and presenting as part of the cost of sales section of the income statement, while merchandise inventory in ending are those unsold at the end of deducted from the total goods available for sale to arrive at the cost sales in the income statement. Cost of sales or cost goods of goods sold represent to the cost of products sold during the accounting period. So this account is usually a line item in the income statement. A line item is deducted from the sales account to arrive at the gross profit or gross margin. The gross profit is the amount of markup that business realized from the sale of goods or services. This amount should be sufficient enough to cover the operating expenses of the business. Otherwise, the business will sustain losses during the accounting period. Freight out. So it represents the fare of goods sold to customer. So goods or products are sold to customer to earn profit. So sometimes, however, it is a business entity that shoulders the cost of transporting goods from the business premises to the point of destination. The cost of transporting goods from the business to customer is recorded through the account titled freight.
Everyone, I'm here to tackle about the non-current liability accounts. When you say non-current liability, present obligation of the entity arising from the past event which are expected to result in an outflow of resources from the entity that do not meet the criteria of the current liabilities. In other words, liabilities that do not meet the requisite of current liabilities are classified as a non-current liabilities. There are following accounts that are ordinarily classified as a non-current liabilities. So here guys, this is the count of the non-current liabilities: the mortgage payable, the long-term bank loan, the non-current portions of a long-term debt, the finance lease of liability. So let's first tackle of the mortgage payable. So mortgage payable represents the amount of long-term liability that do not supported or backed up by collateral. So meaning you can also pay it by collateral. When you say collateral, it is a something that you promise to give to someone that if you cannot pay your debt. Collateral means as a safety measurement. It can be a land, a car, a house, or something that you have that can be able to pay your debt. The second one is the long-term bank loan. Bank loan, rather, used as representing the bank loan with the maturity periods of the term or the term is beyond 1 year. It can also extend to 3 to 10 years depending on its purpose. This has two natures of industrial. It is on the industrials and commercial. Industrials, the primary purpose is to finance certain industry like mining, fishing, manufacturing, logging, and the like. Commercial, on the other hand, the purpose is to additional working capital of the business or the expansion of the existing facilities. So the third one is the non-current portions of the long-term debt. When you say the non-current portion of the long-term debt, represents the portion of the debt or the loan that will not mature within 1 year from the date that the statement of financial position. So, in other words, it is a balance that will not be settled within 1 year. It described as a non-current portion of the long-term debt. The last one is the finance lease liability, represents the liability portions of the asset acquired through finances lease, the term lease synonyms, and the term rent. Here, it has a two kind of lease. Operating lease, it is a thesis or the one renting property is simply intended to cover the monthly rental property. The other one is the operating lease, releasing the directly buying rather the property of the lesser and the end of the lease term the property becomes a property of the lessor. Next topic is the equity or the owner's equity. When you say equity, represents the residual interest of the owner in the assets of the business after deducting all its liabilities. In other words, equity represents what is left to the business after all the liabilities are fully paid. It has categorized as follows: capital, withdrawal, the net incomes, and the net loss. So capital. Capital represents the initial investment of the owner at the start of the operations or the beginning capital in succeeding years. So it represents the money that you spent to start or begin the business. It means the investment, your first investment in your business. So let's go to withdrawal or drawing, guys. Withdrawal or drawing represents the temporary withdrawal of capital by the owner from the business for his personal use. It also occurs when the funds are removed from the account. Withdrawals can be triggered for many types of account, including bank accounts or pension accounts. So, so the last one is the net income or the net loss. When you say the net income or the net loss, it is the line items in the equity sections of the statement of financial positions. When you say net incomes, it represents when your income is greater than your expenses. When you say net loss, it represents when your income is lower than your expenses. So let's now tackle about the income accounts. We have here the service income. So service incomes represents the income realized for all types of income derived from the service rendered. So meaning your income through your service. So the next one is the professional incomes. It is represents the amount of incomes earned by professionals from the practice of their professions. So meaning the earned income of professionals from their profession or work and not through their business. So the next one is the rental income. Represents the income earned from the building, space, and the other properties rented or leased out by the business. So when you say rental incomes, it was an income from your rental places, just like hotels, resort, apartments that you have. So it is a rental income. Let's talk about the expenses account. When you say expenses accounts, your expenses in your business, so meaning mga nagasto nimo in your business. So let's talk about the salary and wages. Salary and wages represents payment of service rendered by workers and employees, which means mga sweldo sa imong mga trabahante na spend di mo like the 13-month pay, cost of living allowances, Christmas bonus, overtime pay, and etc. So the next one is the rent expenses. Rent expenses represents the amount paid for the use of office space, store space, or factory area. So kung nag-rent ka, dapat mubayad yung kag-renta. So it is includes in your expenses in your business. So the next one is the office supply expenses. When you say supply expenses represents the different materials that you use in your business, just like bond papers, if you are in the office, and other etc. things that you need in your business. The next and the last topic that I'll have is the store supplies expenses. Supplies expenses represents the store-related materials used by the business in its day-to-day of operations. So it means it includes items such as plastic bags, tapes, stapler, fillers, etc. that you will going to use in your business. So that's all for me and thank you so much.